Are you looking to get a funded trading account? I know nowadays there are a lot of options for you. But here at Trader Funding Program, we do things a little bit differently. Plus, we're run by a group of traders that have decades of experience on trading desks and trading floors from around the globe. And we have a simple set of guidelines for you to follow with no hidden rules. And plus, we give you tools to help you become successful, like using ForexAnalytix, like being in a community of traders where you get to talk to people like me and other ForexAnalytix analysts all throughout the day. If you take an assessment during the month of July 2024, you're going to get a one-on-one consultation with me, Blake Morrow, President of ForexAnalytix. So join us today. I look forward to speaking with you soon.
Good morning, good morning, good morning. Thank God it's Friday. And what a start of the Friday we had today. There's this little Crowdstrike thing going on, messing up with absolutely everything really, from Microsoft Windows to airports to banks to stock exchanges and everything. It's still ongoing, but a lot of stuff is already coming back online. So let's hope we stay live here. I gave some extra food to the hamster to run, to keep this running. So welcome everybody. And let's dig into what is happening. But before that, a little reminder that we have a special offer going on in the month of July, that if you open an assessment for a funded trading account, I guess it's above a certain level, but you have to check it on the website. You will get a free 45-minute one-on-one session with Blake to take you through all the ins and outs of the trader funding program, explain how he managed to do his own, and it's going to be a very, very interesting one. So if I were you, I would give it a try and see what Blake has to tell you. And in the meantime as well, if you take the assessment, you will have free access for a while to the ForexAnalytix chat room, which is one of the most active chat rooms in the FX world and beyond. So we'll see you there. Good morning, everybody. I'm not going to do like a day, let's say good morning to everybody personally, but you are all personally greeted from my side as well, of course. Let's dig into what's happening here, and traditionally, let's do a little tour of the world first. And we heard a little more from the Chinese officials after the end of their plenum. We had the statement yesterday. It's all still very much localized. They did say something about markets and all that, but investors not really got too much to stick their teeth in on the outcome of the plenum right now, at least. So this CNH is still a little bit under pressure-ish. Most of what we are seeing today is rather a dollar move than really a Chinese yuan move. But anyway, I mean, dollar China is a little bit higher, trading above 728 again. We're staying in that range, held the supports well, as I'll be showing in a minute or in a few minutes. And perhaps there's a chance of this moving gradually back to 730 perhaps now. PBOC is also fixing the dollar China back above 713 today. So there's hope for the loans. And as you know, we did a bit of a live Forex, I was going to say Forex flow show trade the other day, buying around 726.5. Took a little bit off, as we usually do. People in our chat room will have seen where we took a bit of profits. And now this position is running relatively smoothly. What else? We had a few Fed speakers as well. Dani was one of them, saying that the recent data had been really good, that the labor market is coming back into balance, but things could still be bumpy, and they are, as they all say, completely data dependent from now. So not closing any doors, not opening any more, not giving us, especially nothing more for the, what is it, the 1st of August, 31st of July meeting. So I the base case is still that they won't move anything now, a bit like the ECB autopilot. I'll come to the ECB in a minute. Also, and politics, as we know, do influence markets. And yesterday, Tariff Man, during his official acceptance of his nomination for the Republicans, during the Republican National Convention, said that he would incentivize the car industry by tax incentives and also extra tariffs on foreign cars. So that is also playing against some of those Chinese, but also wouldn't rule out any of those Japanese cars as well. And who knows which others as well, even European cars perhaps. So that was one of the lines. We also heard from JD Vance, also pretty hawkish on in his talks, and yeah, they're keeping the markets on their toes and keeping what we call now the Trump 2 trade pretty much alive. We have seen a bit of impact on the Mexican peso as well on the back of it. I'll show the rates a bit later, because we are on interesting levels right now, actually, in the dollar mix and other mix process. Yes. Before anything else, I'm going to go straight into the what ECB gave us, which is not a lot, and then Lagarde was pretty much on autopilot, completely data dependent, not opening, not closing too many doors. But the interesting bit that came out a couple of hours later, and just after 4 p.m. London time, was an ECB sources piece, and not too much guessing who may be behind those sources. Ren is probably one of them, and the German side, perhaps even the Dutch side of the ECB may be behind those sources pieces as well, saying that it wasn't even sure whether there would be room for more than one more cut this year, where the market is firmly pricing 2 cuts for this year. So that had thrown a little bit of a spanner in the works, where euro crosses were relatively on the defensive after the ECB and after Lagarde. And we are seeing all those euro crosses tick up a little bit, including stuff like euro sterling, euro commodity currencies, but those may be affected by other stuff as well, such as copper coming down. So yeah, listen, I think within the ECB governing council, it's always going to be a bit of a bun fight between the hawks and the doves, because we heard, for instance, Vidar was saying that inflation is continuing to come down, albeit at a bit of a slower pace, but that he says that the market expectations are rather reasonable. And Simkus said exactly the same thing this morning, that he agrees with the market view of 2 cuts. Ren in turn came out saying that he's not pre-committed to anything. So I guess Ren is one of those that is very close to those ECB sources pieces that we make it out every like somewhere around London fixing time, or just after on the day of ECB meeting. So there is going to be a little. Oh, did I go silent? Do you hear me? No. Okay. Because Simon is telling me in our chat room that he can't hear me anymore. Okay, I most hear Simon, so let me just quickly reply. Okay, so I was on the ECB. Alrighty. Oh, Patrick, that's great. If I'm heard in Florida, I'm happy. All right. So back onto that ECB. if I can, I will. And Angela, I think you're in the other side of the world, right, Angela? Um, so ECB, back to the ECB. Now it had an impact on the process. Risk also. Oh, you're very close to where we are. Risk also got a little bit of a beating, and that is still part, I think, of potentially that Trump trade, that rotation trade, that rebalancing trade. And this morning as well, I think the risk process are a bit affected by these IT outages. Because if your banks are starting to struggle, if equity stock exchanges are starting to struggle, that's usually not good for risk. And I guess that's a bit what we are seeing right now as well in the mix, okay, in the mix with those euro crosses, but it did not affect the euro dollar, which in turn is lower. Right, where were we? Okay, let's move over to Japan. Japan. Okay, so Japan. First of all, the headlines. Kishida came out overnight saying that the Bank of Japan would has to guide the policy with a close eye on the recent yen weakness, and they need to be cautious on the prices due to the yen weakness. So Japanese officials are still not letting off the pressure on the Bank of Japan to do something. And the one of the ministers, Kono, saying that he's not directly requesting the Bank of Japan to hike, but I mean the pressure is on. On the other hand, though, the Japanese government has cut its GDP forecast for fiscal year 2024 down to 0.9% from 1.3%, and that was not taken too well by the Japanese yen, even though we saw, as we can see here on the screen, the CPI ticking up just a little bit again, which in turn is supporting a potential hike even at the end of the month here from the Bank of Japan. How big that hike will be, we've already been talking about it. Could be anything from 10, 15 to if they really want to push things, could even go up to 0.25%, but that would be a big one for Japan. What happened as well earlier today, and we saw a bit of a reaction on the yen, is the minutes coming out of the bond meeting that the BOJ had with the market participants. And there, a door is left open. It seems that Bank of Japan themselves may go with a reduction down to 4 trillion yen, but they are not ruling out. And we heard that the banks calling, the mega banks especially calling for that they could cut their JGB buying to 3 trillion yen per month, which would be really halving what they did before. And the Bank of Japan said that that would be a very strong signal sent to the markets. And then we saw this dollar yen coming down from 157.70s down to 157 the figure, and now we're like stalling somewhere in the middle. So everything is still at play in the yen for me towards the end of the month, and I can imagine that we see a bit more perhaps sellers or rallies in yen pairs. But in the meantime, and my view, it's still very hard. If you look at the JGB yields, which are just taking the 10 years as an example, just turning just above that 1%, it didn't really spike on the inflation data, nor the report that came out, which we could have expected perhaps like 1 or 2 BPs, but then we just came back into the middle. So to me, it's still a bit tough to stay long yen for longer right now, especially when we see that the dollar has recovered a bit overnight from yesterday, and then with the equity markets lower as well, it did not have too much of an impact on the yen as such versus dollar anyway. Moving on. Just checking my sheet here. Okay, I think we can go back to looking at what happened on the US data then. We had a bit of an uptick in the initial jobless claims. How should I say? We had a 10, 15 pips move on the dollar, and then with some delay, the Philly Fed data came out. It's not your biggest data point, but what we do have to note here is, okay, it had a bit of a jump here, which was the first jump in, was it in 2024? I don't really recall. Let me just quickly have a look at it. No, it's been up and down. But the employment index rose quite a bit. The new orders were also pretty good, and the prices were kind of holding, a bit lower than the prior one, kind of holding. The business conditions rose pretty much, and somewhere that was a bit the start of this slow grind that the dollar had, picking up a little bit. Okay. That is where it all really started, and then we had a bit of an acceleration overnight as well. Also due to the fact, and we will have to look at gold as well. Also due to the fact that Asia, for the first session of the week, did not buy any gold. Okay, so I do think that had a bit of an impact as well on global markets overnight, yesterday evening, and into our morning session. Okay. Bit of a mention for the funniest, if not most excited central bank governor on the planet, Rand. So the base case had been respected. The interest rate decision was to keep the interest rates at 8.25%. Everything unchanged, prime rate as well. Then we had the meeting, which was really funny. I actually hooked off from Lagarde's meeting just to listen to this central bank governor, because he's just too funny. He said virtually everything, and it's contrary, but he did leave the door open for somewhat lower interest rates, being sticky, but he was expecting interest rates to start to follow. We must know that they are big followers of the Fed. Okay, so for as long as the Fed stands pat, they could be holding rates still as well. But he did say that that inflation was moving towards better levels, albeit not at the pace that they would want. But he was not too happy about GDP growth and economic growth over there. So he is potentially, and I would say he is, preparing us for one of the next meetings to start cutting as well. All right. So Rand pretty stable-ish around the time of the announcement, bit of a yo-yo as usual, but now in line with the rest of the dollars, and also I would argue technically the dollar rand is a bit higher and looking as if we could push through a little bit. The 10-year tips auctions, and that was the other one that drove the dollar smalls, wasn't very well. I just got to check quickly on where the when issued rate was, and I think that was in the 186. Yep, 186.5. And you see, we saw a nearly two basis points tail. It's not your biggest auction either, but it is watched by the market because it's a 10-year. It is inflation linked, so this is relatively important. So the dollar also ticked up on the back of this. Right, Logan, nothing really special there. Bowman overnight was more talking about different stuff, so we're going to pass as well. And then this morning we had a bit of a weaker retail sales report out of the UK, and it has weighed a little bit on sterling. Okay, although the weather-related excuse has been used all over the place, it is a pretty decent setback. Okay, we can't just brush everything under the carpet due to weather. Of course, we can have a recovery, I would say, next month, thanks to the weather, if the with a more clement weather. But this is still a relatively negative number because it was already expected to come out negative, but it came out quite negative here. And the sterling is suffering a little bit this morning, bit of a setback as well. Yesterday, I also said, don't know whether I said on the Flow Show, but at least on Face or in our room, that cable was looking a little bit failure-ish with the move back below 130. German PPI continuing to well, the monthly a little above zero, but continuing its slide lower. Wasn't really a mover. Current account wasn't really a mover either this morning in Euroland. And on the docket for later is very little. We do have Williams and Postage later, but no data out of the US, only data out of Canada. And looking at how Canada is reacting and is trading lately, I would say keep an eye on them because they may move the needle. Canadian dollar is a little weak, and if those retail sales come out a bit weak too, it could give like this Friday push in the Canadian dollar, right? And we could be trading at weaker levels yet again in the Canadian dollar. As I said, Williams, we heard already a lot of times from him, and Bostic. Well, I'm not sure whether that is going to give us anything really fresh either. So I would say for now, watch what's happening on those IT outages because it can have a little bit of an effect on risk as well. And look to see what the American markets are going to do with the dollar. We are in a bit of a recovery here in the dollar, and let's move over to the rates and interest rates first of all. As we can see here on the US 10s, we did kind of hold that line here that I put on the other day. That is around 415. So everybody's talking about the 420. We are back above, but I would also say that to keep an eye on this one. All right, it could have been that those tips auctions added a bit to the fun. I need to refresh my charts, but that's all right. The main levels are still the same. So this one is holding. This one is going to be, I reckon, the next level to watch here around 415. If that craps out, I think the dollar is also going to turn back south. But in the meantime, we are still in that bit of Trump trading. Yeah, as you can see, we are still between the 2 and the 10s here. The 2s are at around 477, 478, still around 27 BPs negative, but that is still part of somewhere the Trump trade that the inversion is getting less and the curve is steepening a little bit. Right, FX and metals. Okay, if you guys want me to talk about anything in specific, just let me know in the chat box. I'm going to try not to have a 1-hour meeting today, okay? Yesterday we extended a little bit because we had an interesting subject to talk about it. Today I'm going to run through the major charts and tell you what I think about stuff, but let's not do an hour one. Okay, gold, as you know, I'm always very interested in knowing what's happening in Asia. And yes, we had the 127 extension. Also, what I've been showing, we had this little trend line. I said in the room as well that this was starting to look a bit stretched for this round. And what happened? No buyers in Asia today, and we broke back below 24.5. Acceleration. We didn't even stop in the 2430s. I thought sooner or later we would challenge at least the buyers. We saw this break above. We saw a bit of a retest and then another leg higher, but this was losing steam. And since Asia hasn't bought it, we are back below. Okay, next levels, to me, 2405, 24, a bit psychological. And then this one here, this little zone here, from 23.95 down to 23.87, okay? This is going to be important now because we've done this this move higher, but getting back down to where the prior high here was would mean a 61.8 retracement, and that's already quite a bit, all right? So this, to me, this level really will have to hold. I haven't changed my overall view on metals. I still think that in the long run, they are going to trade higher. But for now, as people know, I'm trailed out of the longs that I had from here in this zone, trailed out of the rest, and I'm waiting. I am going to try to start to reload in this zone, okay? Because I still am overall relatively positive towards what's happening in the metals overall, but especially now in gold. And I think gold is holding up so much better than silver, because silver is trading. If you look at tariffs on EVs and stuff, it is somewhere logic as well that silver is underperforming gold. We're also expecting a bit weaker data somewhere. So silver, being an industrial metal, being very much used in all batteries and things, it is underperforming. So yes, Brian, I will get to that. So I've let, as people know in the room as well, I've let a lot go once we started to sputter here around 31. So I was pretty fortunate to let my ads from 29.60s or so the other day go here, and now waiting just with my base, because my very long-term position is still valid, I think, and over time I also think that when the evolution of EVs and all of that is not done, and geopolitics should somewhere play still in the long run for a bit higher levels. But yeah, I wouldn't rule out a retest. We are nearing here on levels 29. The figure 20, mid 28s is going to be important as well. Okay, this one here, those levels here, 28.60s, call it 28.5. If that would go, there may be a bit of a naughty acceleration. Why not even into the 26s? But that remains to be seen. Let's see what happens first on around 29, the figure. The majors. 2020. ZB, I'll have a look at it, Gavin, yeah. The majors. Euro, dollar, we didn't go there. I said there was a possibility, if the ECB would be hawkish, that we could go and have a test of the triangle. We didn't, so we are coming back down here. I'd say all relatively within the normality of things. We still have a very lukewarm and even not really impressive Eurozone growth going on. So I would say that it's not more than normal, really, that we even could come back down into the middle of this zone. Intraday 108.60s, and then I would say potential to get back down to low 108s, somewhere in the 108.1020 or so would be perhaps nothing more than normal, really. Let me just do the exercise here and see where the 50% of this comes in. There. 108 the figure, 107.95, 108 the figure. Why not? I mean, it's all within the possibilities here. I'm still not a huge Euro fan, but for the time being, we have to take into account a bit of negative risk. And what usually happens when risk is negative is that Euro crosses, selective Euro crosses, are a little bit big. So I'm not really planning to trade a lot of this euro, because of also that Euro ECB pieces. sources piece is putting a bit of a bit under the euro crosses right now. Okay, cable, because I know that a lot of you are looking at cable. So this is what I said yesterday. And I think I said it at the end of the flow show when Ryan was talking about the cable. 130.20, 15.20, it had to get back above there for it to start going again. So I'm pretty happy to have let the rest of my cables that I had built up on the way up to let them go here. I'm flat for now, waiting to see what happens because on a Friday a lot can happen really. We are testing a little bit of a trend line support. I'd say watch what's going on, and we are closing in at 128.90, 128.80, because that could bring us somewhere closer to the 128 and a quarter. And recall what we've said yesterday on those medium term and longer term levels. There is a bit of confluence of levels here in that low 128s. And if we get down there, I'm going to monitor this very, very closely. Okay, there is a real possibility if the dollar continues to strengthen, because we see other dollars as well keeping DS3s 128.20. Yeah, Angela, I think there's a lot coming together in the 128 and a quarter, 128.20, 30. Call that zone. Even Ryan yesterday was showing the longer term. There's a lot happening around there. So this is really going to be an important zone if the cable can make it back down there, which, as things stand right now, I would not exclude it at all. And then whether I'm starting to get smalls back into it will be seen about the timing. If it's really towards the close of the day, I might actually get very interested. If it's happening before, like London fixings and stuff, I'm probably going to be a bit patient. And then euro sterling, we start to correct, and that's what I was saying also in earlier this week. All those moves that we've seen, and call it in the cable, call it in the gold, call it in dollar China lower, call it that dollar rand coming back to the triangle support. It was all looking a little bit like, all right, that's that leg of the rebalancing, the whatever FX wants to do on the back of that Trump 2 trade that we saw in stuff like the MEX and so. But the MEX taking apart, and perhaps the Canada is a bit of a different one. But all those majors were starting to look a bit, shall we say, stretched, or people wanting to push positions. And most of the time, as we also saw on those CFTC data, which I don't attach a lot of importance to, but when you see the numbers really starting to fly up on the positioning, it does have a little bit of a tendency of correcting itself a bit, and that's what we are doing now in the euro sterling as well. For the time being, I would say it is still a correction, 84.30, 84.45, and then to go back on that monthly one, that remember this 84.48, it's still there, you know, on the 200 monthly average, it is still there. So that is still going to be my benchmark. We are slowly creeping towards the end of the month, but that is going to be my benchmark for what the euro sterling is going to do. In the meantime, I've reduced my positions as I usually do. So, and I'm quite happy for it, because I managed to reduce positions below 84 and then around 84, and then even this morning I did some just above 84.15. So I'm more than happy to travel with reduced positions and leaving room in my positions to add again. And if it goes against me, I will give back a lot less than if I would have a full positions. All right. And that brings us to what happened in the yen. Okay. That is not what I wanted to do. Not this one. Righty. Look where we stopped that big decline on the dollar yen on Tuesday morning, yesterday morning, right? Yesterday early morning it was. on the bottom of the cloud, the daily cloud. We stopped right there. And we also stopped not too far. Let me take this out. We also stopped not too far from trendline support, and we also stopped not too far from the 155, which is a pretty important levels on quite a few time zones. I was going to say quite a few time zones. All right. So it is an important level here. All right. That 155. We have moved back up, and where did we move back up to? Well, we've broken that trend line here on the way down, very close to retesting it. Okay. And I think that is now the level that we have to watch topside, high 157s. If that goes through, then I guess that's going to go paired with crosses also regaining. And there I need to show you what I showed on that euro yen. There as well, we stopped on a relatively important level, 23.6, 170.13, and now we are gradually creeping back above. Okay, so this is one for the more. This is going to be an important one if one day this gives way. We don't know what MOF's plans are for next week. If they are still going to do a bit of a guerrilla type intervention thing. They have been quiet of late, but we can't exclude them, of course, to come back into the market at any time. So, but keep an eye on here for as long as that holds. And then we were talking about yesterday the reversals, right? And I think we have to talk about those. I think it's important because this is just your low 20 in when we did the lows in 2023, end of 23, and then the highs in 2024. And when you ask yourself, and perhaps not in euro, it's not so much the carry trade, right? I mean, there's other currencies in carry trades, but if you wonder what the long termers are thinking or whether people are forced out of positions, if they do it on a purely technical basis, we only tested the 23.6 of this move. Okay, we didn't go not to the 38.2. We only tested the 23.6, and that is still where I think that the long or the more medium termers, they are not going to give in that easily because they are probably still in a kind of mood saying that they still get money to be short yen, right? And they are still looking at stuff and seeing that we are not correcting more than a relatively small correction. It can be big in pips, okay? I mean, this is sterling yen, for instance, 208 down to 202. It's 600 points. It is pretty big, but if you look at it, if you look at the move that we did only since December up to July, we didn't even reach the 23.6, all right, in sterling yen, for instance. That's just to give two examples. So, and sterling is more interesting because we are still at 5.5%. So I think the more medium to longer termers, they are still probably running their positions. They may start to think really seriously about it. If you, for instance, go down below 200 in sterling yen, then they will probably start to think, well, here something more important may be going on. But in the meantime, there's a big difference in trading the short term and the more medium to longer term. That is my opinion. Let me. Well, I've taken this off. ZB. Treasury bond futures. This one? Oh yeah. Okay. Yeah, I see what you're telling us here. Yeah, this one, right? Yeah, but then on the other hand, is it really? Yeah, multiple tests. Yeah, but this is probably your 415 in the yields, can it? This is likely to be your 415 in the yields. Let me see a little bit longer what we are doing here. Okay, this I think is a pretty logic support. I'd rather look at it this way, perhaps. Okay, and then yeah, if your 120.20 goes, then we're probably going to push a bit higher. 28th of March. Oh, okay, yeah. All right, I see. Okay, yeah, and that's probably the same thing as that line here in the tens, right? Oh no, the tens here, that one that I was showing earlier. Looks like well, yeah, looks like we are on similar levels there. All right, thank you, Gav. Let me just quickly move on because I'm looking at the time. Okay, what else? Euro Aussie. Okay, I've got bits and pieces in this, but very light. Old gap to fill the June highs. The gap to the June highs. Angela, this one here, Angela? Oof. Okay, first of all, I don't trade gaps, but yeah, it is holding it, and that really started to ramp higher on the back of those ECB sources. Still fragile, but also look at copper, right? Copper is giving back a lot, and we know that the Australian dollar is trading on the back of copper, and you look at what the Aussie did as well, despite a better unemployment report. Aussie couldn't keep its highs versus the dollar, and we've seen a pretty big setback. Also, I think driven by copper, and then the euro Aussie driven by those ECB sources. I trust. I'm just a tiny bit in, and I'm going to watch two things here: 162.85, and then I know there's a big high. Yeah, that's this one, Angela. This one, on the 10th of June, right? This one. Okay. Yeah, that's the one. Okay. Yeah. So I'm going in I'm really tiny. So I mean, my account is never going to be in danger, but I'm my main zone, and that rejoins then what Angela was saying. Right now is right up here. Yeah. 163.70 to one up to 164. Yeah, that's the one. It's really there. And I think that's going to be an important zone if ever we revisit, because look at the traffic that we had into that zone a number of times. You can even go back a bit longer. So I think that's going to be a very interesting one if we ever get there. But if you look at it a bit more medium term, I still think that overall this bigger one is valid right now. Okay, so I'm still medium to longer term. I'm still relatively I'm not going to say outright bearish, because we did have a good hold here as well, just at 160. But I'm more like, I feel more comfortable selling rallies than buying dips. Let's put it that way. Brings us to the antipodians. Just simply, as you can see, we could not hold the highs in the Aussie, and we didn't manage to go and test above 68. And as I've been saying it a couple of times, we really need to clear those 68s to have a chance. I'm sorry for it to be a bit messy, but we really need to clear here that 68, 15, 25. Yeah. That's going to be very important on the Aussie top side whenever it happens. And this is looking fragile now for a retest, possibly down to 66, 55, 65, especially if we get a clear out of the copper again today. Even stuff like gold and things will have a bit of an impact, and gold is slipping further right now. And Kiwi, I'm leaving it alone, but it's not looking too fresh either. We are below a bit of a support trend line here. It's not looking too good. This is probably in for a 60 the figure test, 59.90, 60 the figure, where we started the last leg higher from. it's looking like we are going there. Why not even lower if the dollar is behaving well? Brings us to the emergings. Matthew, 1805, mate. 1805 is where I've got a bit of a trend line coming in on the dollar mix. You quickly sold it at 18. Yeah, why not? You depending on how tight you want to be, how much leeway you have. I think 1805, it goes back above 1806 and a half, probably going to run further. There are levels above 1813, 1820, 1830. There are levels above. 1830 is going to be your first important one if we get a break above, which looks possible right now. If you look at all the dollars, how they are trading right now, it looks quite possible that we are going above there. And as I said, time is, in my opinion, starting to play against the max. I didn't get my my low ones here to get long, but time is starting to play against the max. And listen very carefully. Now we heard from Trump what he's planning to do, but listen very carefully what Scheinbaum and AMLO are going to do. Because if they start to make unpopular decisions, this could really start to fly. If in turn they delay everything, I still think it's not too late to have that little setback, because in the meantime, the Mexican peso is still an 11% currency. But we are at interesting levels, Matthew, indeed. Quickly on the rand, as I promised, we're starting to move. Okay, very nice hold. Bit of an up and down yo-yo on the back of the SARB yesterday. Dollar bit, risk is off, and gold is lower, and we are trading, and we are now coming into a bit of a zone here, 36.44. Okay, if that goes, I think it's possible to get back into the 1860s. I think it is a plausible thing. Getting somewhere in the middle of that triangle towards the upper end. I'm not sure if there is any potential to get up to 19s, but that may be something for next week or so. All right. But I do think that it is possible, if the dollar continues to be bid, that we see, and gold and silver, for instance, to be offered, that we see a push towards the end of the week. It is possible. And then the last one, China, it held, and it held yesterday once more. Okay, so that was holding yesterday. I think it was yesterday on the flow show that we bought. So now we are back into the zone here. I did let a little bit go, as I usually do. I like to slice and dice, but I do think that if nothing else changes, let's put it that way, after the plenum, PBOC, if nothing else changes, I do think there's a chance that this goes back into the 730s at some point, where I'm looking to at least the ad that I did to let the rest of my ad go. And as usual, play a bit of ping pong, Bran. You know me, I like to play ping pong. And with that, gentle people, I am going to call this a week, and I'm thanking you all for your presence and your support to the Flow Show. And Ryan will be back on Monday, so have a great weekend. Don't do anything silly. The markets will still be there on Monday if you don't know what to do today. Thank you very much, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.